So this comes from our friends at Fortune.com. Fortune magazine writes, home buyers buckle up for another brutal spring housing market. It's usually around this time of year, with the holiday season firmly in the rearview mirror, that home buyers and sellers alike begin to make their way back to the market. That will continue to pick up each week until March arrives. At that point, the industry's busy season, known as the spring real estate market, will be off to the races. But this year, there is more unease than excitement coming from the home shopper side of the equation. For one thing, last year's spring housing market, which was arguably the fiercest in history, is still seared into the collective memories of unsuccessful 2021 home shoppers. To understand how far the deck was stacked against buyers last year, just look at the data. The numbers of homes for sale last spring hit the lowest level in more than 40 years. Wow. Bidding wars hit an all-time high, with 72% of homes getting multiple offers in April 2021. And that frenzy saw home appreciation climb to the highest level in tabulated history. Tabulated history, not just history. Wow. That raises a question. Should home buyers expect to find a spring housing market in 2022 that is friendlier when compared with 2021? After all, the rate of home price growth over the past year, up 19.1%, between October 2020 and October 2021, just can't be sustained forever. All right. So then it breaks it down to, yeah, go ahead, man.
Well, I support that, but I will say, in tying some of our past segments together, inflation will help support those higher numbers over time. That's one of the biggest factors that will sustain the growth, or at least support the past growth.
Mm-hmm. Mm-hmm. Yeah. The other thing I was going to say, just when I started talking about Fortune.com, this is a national view of it. It's pretty dire. I can only expect, of course, right? Los Angeles is much worse and even more accelerated. So,
well, they have a little map that's very interesting when we get to that.
Yeah. Housing supply. So here's one factor. To get an indication of what the housing market will look like during the early months of 2021, we looked at the one metric housing economists repeatedly told Fortune last year to watch heading into the spring market: housing inventory. At the height of the spring 2021 bidding war bonanza, the number of homes for sale was 43% below pre-pandemic levels. Given that the demand side of the market is unlikely to back off much, there's simply too many millennials aging into their first home buying years. The supply side, also known as inventory, will dictate what the spring 2022 housing market will look like.
Right. So I want to pause there, because that's having that conversation yesterday, and we've been seeing that theme throughout the year and last year. Just that it's the prime buying age for the largest group of home buyers coming into the market. And that's not going anywhere. They can't build fast enough to keep up with that volume, as long as they don't leave the market. I think what's happened is, like in our case in big cities, maybe they've dispersed, gone into other areas where there are opportunities and where they can afford to buy. But that volume of buyers is not going anywhere. So it's going to be competitive. The only glimpse, which if it happens, it's not going to happen until well after the pandemic ends, in my opinion, is that there are probably still some baby boomers still riding this pandemic thing all the way out till the end. Maybe then some of their homes will go on the market, but I don't think by that point it's going to have a large impact. Millennial buyers aren't going away.
Well, gosh, man, what was it a couple of days ago? They're like, oh, there's a new variant after Omicron. It's like, well, this might be a very long new normal for all of us, All right, to be blunt, the latest reading of housing inventory levels doesn't look good for would-be home buyers. As of December, there were just 1 million homes listed for sale on Zillow. That's down 17.5% from December 2020 and down 37.8% from December 2019, when there were nearly 1.7 million homes for sale. This means the housing market is tighter right now than it was heading into the hyper-competitive 2021 spring housing market. All right, never miss a blah, blah, blah. All right, so simply put, home shoppers should expect more heartache, not relief. And there's the beautiful graph.
Right. I think the graph was interesting. First, it's obviously a downward graph, but it also, I wanted to at least point out, we talk about maybe trying to catch moments in the market. And this graph shows moments where if inventory is rising, maybe there's some more opportunities. If inventory is shrinking, those opportunities go away. That is where persistence will pay off for those who put their best foot forward and continue to not give up. They've found something. They get into a house, and maybe it means you have to hit one of those lulls, or one of those highs in inventory, which is what this is showing as inventory levels. And that's where the opportunity came, because other people gave up and you didn't. So we're not asking you to lose faith. We're just saying, I think the mindset has to shift to a slightly more aggressive position.
Got it. Okay. As the 2021 spring market came to a conclusion last year, industry insiders hoped inventory levels would begin to rise. Through the summer and fall, inventory did finally begin to tick up a bit. See the chart above. The theory was that as vaccines rolled out, more elderly homeowners who were cautious about moving during the pandemic would finally put their homes up for sale. Economists also predicted the September 2021 winding down of the forbearance program for homeowners negatively impacted by the pandemic would see more homes come on the market. While the number of homes listed for sale did rise, it hasn't been enough to make the market friendly for home buyers. This lack of inventory isn't just clustered into a handful of housing markets either. Among the 327 housing markets tracked by Zillow, 254 have inventory levels that are down by more than 30% between December 2019 and December 2021. In 54 housing markets, including places like Miami and Fort Collins, Colorado, housing inventory is still down by over 50% from pre-pandemic levels. And there's that beautiful map.
Those are ridiculous numbers.
Yeah.
Ridiculous. Yeah. Couple that with, the largest group of home buyers coming online all at the same time. There are two blue spots on that entire map that have an inventory increase. Other than that, it's red, pink, and gray, which, it's depleted inventory in what looks like, 60% of the country.
Yeah. Pretty shocking map. All right. So interest rates is the other factor. There is one big wild card right now. The inflation-concerned Federal Reserve is expected to increase rates several times in 2022. That is already pushing mortgage rates higher. As of Thursday, the average 30-year fixed mortgage rate has hit 3.45%. That's up from 3.1% last month, and a hefty bounce from the 2.65% rate in January 2021. Rising mortgage rates would lock some home buyers out of the market and could put downward pressure on home price growth. But in the short term, rising mortgage rates could actually make the housing market even more competitive. Ollie Wolf, chief economist at Zonda, a housing market research firm, tells Fortune that home shoppers who could see this as their last chance to snag pandemic-spurred low mortgage rates might begin to pour into the housing market in the coming weeks. Of course, a rush of home buyers into a market with already depleted levels of inventory would be a perfect storm for another spike in bidding wars. All right.
Right. So that makes me think of what we've heard for, 15 years. We're at historic low rates, right? Mm-hmm. That's been said for 15 years. Not that it's not accurate, but I think this is people trying to predict the future and get ahead of the curve. This is what happened with what's one of the biggest things that spurred the strong market, because people were predicting inflation. A year later, here they are defining that we are in a high inflationary market. So yes, that could happen. And getting ahead of the curve is the only thing you could try to do. And look, I never want people to become so uncomfortable that it's going to create daily discomfort, and then maybe it's just not the right time.
Yeah.
But we also just want people buyers to realize that if you're not going to be aggressive, and choosing the right lender, we can't say that enough, that allows you to be aggressive.
Yeah.
It's not only price, it's terms. You have to cover all the angles.
Yeah.
If you're missing angles, you're done.
Yeah. I was thinking about this earlier when we were going to talk about this. I'm glad you reminded me. Yeah. Right. Not just being aggressive, but being smart in that aggression. And yeah, it really is the team around you, not just you, but that agent, the lender, and really making things work, because it is those tiny details, those tiny moves that actually might get you that house. And it's only becoming more and more like that. So yeah.
And the tough thing is, most buyers don't know what those details are. Experienced buyers may, if they're getting really good advice from experienced buyers that they know, they may. But even buyers that we help get a house and go on, so they're thankful and appreciative, but I'm not even sure they completely grasp everything that it took to get in the door, and that's fine.
Yeah.
They don't need to.
Right. Or they reflect later and they let us know. Yeah.
Right.
Yeah.
So good agent, good lender, aggression in the right place, as you said, Joe. A little bit of trying to read the tea leaves, which is what we're trying to do, looking at the past, predicting the future a little. It takes all of that.
Yeah. Yeah. And, when I was at the Avenue 8 sales meeting yesterday, Scott, one of the managing directors, also said something that goes in line with this, which was he gave an example of one very big agent over in the West Side who he is known for. If you do not know him, you will not get an offer back. You will not get a counter back. You have to be introduced to him by somebody that he knows. If you even have a chance, if you even have a shot at that house. So again, it goes back to, yes, do you have a good agent? But do you also have an agent that knows the other agents in that area? Because that was the extreme that he gave yesterday, Scott, about, you got to get out there and these agents need to know each other.
Yeah. And we always compare, if we're presenting an offer, we say, well, when we're on the listing side, this is how we respond, which is what other agents are doing. If you don't deliver it well, if you don't talk well, if you don't ask the right questions, it's not going to happen. So buyers, you need to do all you can. It doesn't always mean paying more. That's the one maybe misconception when we say be aggressive. It's not just about paying more. Yes, more often than not, the highest price is going to get the accepted offer, but all the other things matter. They do matter. Make sure you at least have all those other things lined up to help you be successful.
Yeah. Good stuff.